Our first session in the America Zone today is a panel discussing the digital and cultural transformation in a post-COVID world. The panel is moderated by Kroener French IFF. Joining him, Dr. Leda Glyptis, Chief Client Officer at 10x Future Technologies, Matthias Kroener, founder and former Chief Executive of Fidor Bank, Nigel Verdon, co-founder and Chief Executive Officer of Railsbank, and Sheel, founder at Better Tomorrow Ventures. Let's now join Kroener and the panel for their discussion.
Thanks very much, Glenn. And the title of the session was actually Co-COVID World. And I think that that's a phrase that MD Ravi Menon and others have used to connote that this isn't sort of a pandemic that we're just waiting for the post-COVID world, but that there are altered conditions that we'll be living with and working in for some time as society and financial services grapples with this new environment. So I always strive to have sessions be lively and informative. And with this group, I have no doubt that we will have a great and exciting session. So the first thing that I wanted us to really jump into is, how are financial service firms doing in the reaction to COVID? How are they doing in supporting society and its needs right now? And if you thought of this pandemic and the reactions to it as a referendum on digital transformation of the industry, what do the results look like? So Leda, maybe if we could start with you with your thoughts.
It's an interesting question and one that we get asked a lot. And I must admit that I always frown a little bit when I hear representatives of financial institutions celebrating the amazing results they have had in terms of their coping and the policies they put in place. And not because they haven't, but because it's a mixed bag. So I would say that the majority of financial institutions have been ranging from pretty good to very good at coping with the immediate challenges of equipping their colleagues and their teams to deal with the immediate tasks at hand, throwing people at the challenge of creating payment holidays and sort of practical solutions, and providing bridges built with extraordinary human effort to actually deploy some immediate solace and immediate comfort. Have they been good at taking stock and making some radical, bold moves down their digitization agenda that has been simmering for the last 15 years? I would say largely not. We have seen some extraordinary results that were the outcome of human effort, but we have also seen the limitations of the cautious digitization effort of the last few years. We have seen the gaps that not having truly digitally native capabilities give us. And we have also seen a reluctance, understandable, but also dangerous, to commit to the radical next move that would give us the infrastructure that would have made coping with the challenges a little bit easier. So how have they coped? Largely okay. Have they been able to really go out of their way to give something of a springboard to their communities? I would have said not, but they were not equipped for that.
So Nigel, that same question to you, making sure that things functioned, making sure that the sort of lights stayed on, that people could work from home was sort of a Herculean effort. But if we really think about a transformed world and living in conditions like this for a while, or, a very different economy and landscape coming out of this, what are your thoughts on how the industry is done?
Sure. I think, yes, everybody's put a great effort into to be able to work from home and other efforts, but I think it's a real reality slap of the billions that have been spent in the financial services industry on digital transformation has really ended up in what colleagues and others call as a digital death zone, because they've got to a place where analog processes have just been automated as opposed to a true digital type of business. This is an example of this. We clear sterling with the Bank of England directly, and also clear euros. We're also principal members of Visa, Mastercard. We sent all our company home, and the customers didn't realise that. We sent it home earlier than others because we're used to dealing in a risk environment, having built companies through the dot-com bust and the credit crunch. But when the large institutions sending people home, there was definite impact to service. And that shows that there was still a lot of analog process, even in the sort of the digital channel, the apps, etc. So I think it's been a massive, massive wake-up call to actually realise that digital is not about having a digital channel. It's a mindset of removing friction from your processes, automation, etc. And if you look at Amazon is essentially a logistics business. Google is a computer hardware business, if you look at it under the covers. And those still have the mindset of creating great digital product as frictionless to use for consumers, massively scalable, and have that ability. And just another observation is most financial institutions, only 3% of them have any on the boards are people who've got a true digital background. And that's quite telling when you have to, I think, create the post of a chief digital officer, because digital should be in your DNA. And I think we discussed last time the concept of we should have a chief legacy officer to make sure we don't do stupid things again. But this general concept that it's a DNA-led thing, and I think this, and I hope this is good for everybody. The boards and senior management of financial services firms, I think now realise digital is a DNA thing. It's not something you create a post to do. Because Google doesn't have a chief digital officer, neither does Amazon, neither do we, neither did Fidor Bank, and others. I bet 10x doesn't either. So this is the real difference, and I appeal to colleagues in the industry. Let's all work together, because banks are still needed, because they're centres of safety and run by very, very good people. People like ourselves around the table here are digital natives. I think if we actually work together, we can get better outcome for the person we really care about, which is the consumer at the end of the day, and SMEs and customers.
Matthias, we'll dive into some of those questions that Nigel just brought up a bit later about culture and how to drive transformation in the institution. But before we do that, I would imagine you have some thoughts on how what COVID has shown on the digital transformation of the industry and what you think the landscape looks like. How have they done so far?
Kroener, that is so sad, because I really wanted to follow up to Nigel with his points, and we had so much fun talking about the chief incumbent officer. I really call for that position, and I'm sure out of some banks we will have some applications for that. No, but joking aside, actually, it is. I do not see any progress of incumbents becoming digital, right? As Nigel said it, and Leda said it. It's a holistic topic. It's definitely not only technology, and participating in a Zoom call doesn't make you a digital native, right? So it's about corporate culture. It's in particular about the target operating model. It's about your data management. It's about innovative technologies that we could apply in financial services, from Bitcoin to from blockchain to smart contracting, and so on and so forth. I would not see anything so far. I think, yes, what we have to say, the incumbents definitely and the players in the market definitely did do a very good job on their resilience in terms of emergency plans, moving out of the offices, going to home office, and so on and so forth. But in banking, that shouldn't be an issue, should it? Because in banking, we have no goods to carry with us and maybe packages to sell to our customers. It's the money, it's wired anyhow. 98% of the goods we are dealing with are technical anyhow. So what is the deal about it? We just made it, okay? And what we've realized is that what decades of consultancy actually couldn't deliver, a simple virus did. Suddenly it's everybody's aware of that, everybody's talking about it, and so on and so forth. At the end of the day, we are not at the end of the day today. I think it's too early to call. And we have, yes, we see operational resilience, great. We see digital not achieved. We see some points of the backlog maybe working on, but the backlog list is still very, very long. And then we come back to banking itself. We definitely will see stress on the balance sheets. and there we could see again, did they use technology maybe for collection process and so on and so forth, or not? Or do we stick with the traditional way of handling it? I think it's too early to call, and we will see some maybe negative surprises.
So, Sheel, we're starting to see some of those results and surprises. Industry has been stressed by this cycle. The fintech sector has been, stressed or in some cases accelerated by the cycle. But what's your view on how institutions have done so far?
Yeah, I mean, I think from a fintech perspective, it's been phenomenal. It's like our portfolio companies are growing faster than ever before. The transformation from, e-commerce has grown nearly 50% year over year. So the payments associated have grown quite a bit. Branchless banking has accelerated in the US very substantially. The neobanks have done exceptionally well. It's funny because I come from a more traditional background. I worked in consulting, primarily serving financial institutions. At that point, we were still growing branch footprint. And now, of course, it matters less and less. And then in our insurance portfolio, it's been really phenomenal. All these startups have really been significantly benefited by COVID, fortunately, unfortunately. In insurance, for example, like our life insurance company, for our startup life insurance company, you don't need to go to a doctor to get a test. It's all done online via an app, versus a traditional life insurance company, you do need to get to meet with a doctor. It's been a huge boon for us. So all in all, this has been a time that fintechs have really come in and offered a service that consumers needed during this time.
Yeah, and you brought up a good point, which is that this crisis has really accelerated and amplified a lot of consumer adoption. That's something that sometimes takes years or decades to drive, and we saw it in a matter of days around the world simultaneously, which was one of the really remarkable things about this. And as we heard in the earlier session, there's been some, I think, relief in the legacy banking and financial services world, and regulators and supervisors that kind of the functionality worked, the bare minimum was met, society could keep going on, and there was, I think, a huge sigh of relief. But if we really want to raise our aspirations from just supporting those minimal functions and just digitizing the legacy, banks and insurers and institutions, what do we, Nigel, I wanted to come to you and see, what do we really need to thrive while serving the future needs of society and some of the things that have been revealed by this crisis?
Sure, it's my soapbox subject, so be ready 2 hours of talking at. But one of the reasons we set up Railsbank is we have a firm belief that access to financial services is a human right and not a privilege. But I'm pretty sure anybody in the financial services world pretty much thinks the same. And if you look at people's core values, one of the key issues though is the cost structure of the industry, especially so banking, just prevents that. Because if you've got somebody who's on absolute minimum on living on a few dollars or so, and it costs you $15-25 a month to operate a current account, how can you bank them? It should be down at 10 cents. So the space which my co-founder Clive and I were looking at is how do we change the cost structure? We looked at parallels in other industries. And that lovely word of deconstruct everything down to its core components, which anybody's worked in consulting probably makes a good few quid at selling that type of thing. But what it fundamentally means is if you look at Apple took the music industry and deconstructed it down to a simple thing called a track, and a digitized track. It's for 99 cents. And that meant that A, it was available everywhere, B, it was affordable, C, it could be reconstructed and put into new forms and mix it into a format that you want as a consumer, and it can be wrapped around the consumer. And so you had a perfect storm because you took it away the LP and the old form factors, and you created something that didn't have something physical. If you do that to financial services, which is essentially what we've been doing for the past 4 years, is the same thing. You can offer product and deconstruct it, and then reconstruct some bank account from us or another provider, payments from another, cards from another, and construct product around the consumer that works for the consumer at that moment in time. And so that can help, I think, move the industry forward massively. And we did an announcement today, which I won't plug at the moment, but if you look at us, our Houston product, it is also taking inspiration from, again, what Apple did originally. They made the personal computer point and click because they deconstructed how you interact with it. They deconstructed the music industry into the track. And I think if we deconstruct and work on deconstructing the financial services industry into its absolute core components and rebuilding them around the consumer, which is this whole embedded finance movement, we've got something that does change the world. And it does mean that people who need access to finance to get it. What it does do is put up an awful lot of challenges, because it changes it from being financial services, financial company or institution centric to suddenly being customer centric, a customer of choice. Amazon's done this, so has eBay in their respective industries. And so that's what I think is the real challenge: is can we transform the legacy into work in a deconstructed world? Because all the products fundamentally they're offering, a current account or checking account, a payment stuff, are all exactly the same. There's nothing differentiated about them and things. So that's where that's what I see as well. I think the challenge. That's what we've been working on and delivering.
And it sounds deceptively simple to put the customer at the center and really take a customer-centric view on what the needs are when you think about products and services. But again, that can be really transformative across the institution. Sheel, that same question to you: what do firms need to do to thrive moving forward?
Yeah, I think it's really just being aware of what's coming and sort of, I'd say, like, fortunately for us, our software companies tend to be younger and more nimble and able to thrive in different climates. So I think it's just keep doing what you're doing, and they've done well.
Matthias, to you, what are some of those things that legacy institutions maybe should be learning from the firms and the practices that Nigel and Sheel just sort of walked through?
Yeah.
If we aspire from just digitizing today or yesterday's bank, what do they need to do?
Well, that buzzword really for years now is used to kind of heal everything, but I would say the problem is even deeper. 35 years back, I started my business career in hospitality. And actually, I wanted to work at a bank those days only for one reason, because one of my professors at university teaching me hotel administration and management did say, you need to work at the bank because the bank is the enemy. And I wanted to understand the enemy, and I wanted to know how the enemy is working, how the enemy is making a loan decision for me as a future hopeful hospitality manager. And actually, I got stuck. Why? Because the bank managers those days actually came back to me and said, listen, in our organization, you are the only one with a customer-centric thinking. And customer-centric banking was the outcome of that. But that taught me that, okay, I came from hospitality and I'm the only one who is customer centric. So this is lesson number one. You obviously do not learn that in banking. Second, what I learned is that banks are used to take the regulator as an excuse for not being customer centric, because then the bank, and in the meantime, I have to say, to the defense of the banking and financial services industry, yes, sometimes this is exactly the case. As a bank, you might even want to go and do something good and maybe take even more risk on your books because you think now in particular days we are living in, society might need it. But believe me, next minute, the regulator will ring your doorbell and say, listen, what are you doing there? And I think So we have to have a look to the whole environment, and that includes the regulator as a stakeholder. And then thinking back when we founded Fidor, now more than 10 years ago, we had a what I called a strategic square on what we are operating, because we as a bank, as a first step, and I think this is an exercise everybody must do, did have a look to society, did identify a number of mega trends within this society and created that square out of it, which, cornerstones to that was like everything will be mobile. People will do e-commerce. People will still use and massively use video games. This kind of behavioral. People will interact on social media platforms. And that was our cornerstone. And we positioned our feeder bank concept, well, hopefully in the middle, and say, okay, these are the mega trends of society we want to work in. What kind of behavior on our customer side is to be expected, so that we are a good partner for that. And this kind of exercise I do lack and do not see at all, because I would say the problem starts with banks not having an idea what a digital lifestyle is.
Well, Leda, Matthias has mentioned some, constraints that a lot of legacy institutions work under, and you were responsible for innovation at two large legacy institutions. And as you think about sort of that future that we've fast forwarded into this year of e-commerce, embedded finance, very distributed activities, what are some of the things that you think institutions need to do to really thrive and meet customer and society needs going forward?
So I agree with everything that has been said, and I love the way in which it was said. And I feel slightly conflicted that I am always in defense of bankers, but I think there is something worth flagging here. And it was said before, but let's tease it out. The world that most legacy banks operate in is a hybrid now, because they have evolved from a time when a lot of what is now possible wasn't, and their technologies are, and their estate, it comes with immense complexity. Some systems still carry behaviors from a time when real-time connectivity was not possible, let alone desirable. And therefore, the transition of digitizing and trying to keep the shop running while transforming comes with a lot of challenges that have been described. Have the banks been learning? Yes. Are the banks coming to the table to talk to Fidor back in the day about white labeling their platform, to talk to Railsbank, to talk to us at 10X about what the future needs to look like? And are they going on a journey that is hard? Yes. But is it fast enough? And I would say that the biggest realization that has come to banks in the last few years is twofold. One is the bank is no longer in control of the timing. For those of us who have been on the banking side for a very long time, we know that we felt that we had choices to make, and we had the time in which to make them in a way that felt comfortable. And banks have realized, be it the virus, be it the rapid digitization of life around us, that they no longer control the timing. The second piece Matthias already mentioned, but it's worth stressing. The regulator used to be the thing that a lot of banks hid behind. Now the regulator has a profound understanding of what is possible and the value it brings for customers and consumers. So they create accelerated pathways that say to banks, we will give you time to do what you need to, but we will no longer give you air cover. And those big realizations, it's not our tell, the timing is not in our control, and the regulator expects better because they know better is possible, is creating an accelerant for the banks. And it's not easy, but I do believe that we're getting to the point where it's inevitable.
Leda, that's a great summation of the changing environment I think that everyone is working in. At the IF, we spent the last year looking at sort of what was working and what wasn't working in digital transformation, and why, what were some of the internal barriers and challenges, external, and the question of culture and the environment with the regulator came up frequently. And I think culture, is a big issue. It sounds a little squishy. It sounds sort of background, but when you think about the risk culture that was developed and grew up in banks and insurers for some very good reasons for a long time, that's one of the keys that we really need to work through in this transformation. And so that's a subject that I'd like to go to next, Matthias, is how do you really change the culture from a legacy product and vertical organized culture that's really set by sort of the last generation of technology and regulation, and how does the entire ecosystem sort of work together to transform that culture?
Yeah, well, to start it with the outcome or the result, no way of changing that. Full stop. I would not even follow that pipe dream that you can change that. Not in my generation. I'm potentially the eldest in this round, but I will not see that. So I think if you do not have a company that is driven by the CEO, backed fully by the shareholders, and understands that the whole organization needs to convert into a digital organization. And again, I'm not speaking about technology only, right? I do not see any chance that you can convert that, because there will be maybe some people hiding in the organization, waiting for that storm to pass. And once there is any kind of mistake or risk occurring out of that digitization, innovation-centric, whatsoever process and program, they will raise their hand and say, listen, I could have told you. This is all shit. This will never work. And as long as those I could have told yous are part of your organization, you will not succeed on this. It's simply born to fail, first of all. Second, out of my B2B sales experience, let us be blunt on this. We do not have that much time to be kind. Out of my B2B sales experience, I can tell you, you make a sales pitch, successful sales pitch in banking, if you address the potential that the decision maker and the accountable person is going to jail. Then you have a successful sales pitch. Okay, so you're going to go for compliance reason, you're going to go for risk management and all this. If you have a sales pitch which is customer engagement, which is UX maybe, which is dealing with financial illiteracy, which is making the position of the customer more comfortable, and so on and so forth, everybody will say, yes, that's a great idea, but we will have no time for that. Now, COVID is eating up that little budget that was for customer experience and customer improvements, and will focus all the budget for compliance and risk management topics, because we will see negative impact on the risk-related business like loans and so on and so forth. So I see this to be a big step backwards, actually, because the budget is not around, the culture is not in place. Yes, we understood how to operate more like via Zoom and from home, but that's it, guys. This is it.
So, Leda, how do you see the situation? Do you have a similar read?
Say it.
No. I agree. I totally agree with both the urgency and the focus of what is being said. I also agree that the softly approach of let us do a little bit. It's like that feeling of I want to take as much of my space with me into the future, right? As much of the things I'm comfortable with knowing and doing. And I think that the realization that that won't work is absolutely there. And to Matthias's point, if that's how you're doing it, you're set to fail. But I do think that what you said right at the beginning about risk cultures may hold the key to this, because for a very long time, as we said, and it's human nature, right? It's not bank bashing. People have been hiding against the reason why we most recently didn't do something. It was the regulator, it was the risk and compliance department. And if you look at how a lot of our risk and compliance departments have traditionally worked, is checklists that show that even if something has gone wrong, you did all the right things to avoid it. The mindset that you need to deliver meaningful digital capabilities is a combination and balance of the opportunity cost of not doing and of the potential permutations of risk around the possible use of technology, the possible implications. It's a completely different risk mindset. And we have never looked to the risk department as the potential driver of transformation inside a bank. But I'm going to throw it out there that the banks that manage to transform their risk function now have the highest chance of success in the next few years?
And I think at the IF, one of the things that we've seen is a change, certainly at the top of house of the leading regulators and supervisors, to realize that not transforming is actually a fundamental risk to the industry. We were very focused on the risks of moving to cloud until we sort of highlighted what are the risks of not being able to move and translate things into a cloud environment. So Sheel, maybe a comment, risk and compliance, if it's in the ascendancy, I think also there are a number of Fintechs that became acutely aware of AML and KYC risks in operations this year. Some challenger banks had some growing pains.
Yeah.
What are some things that the Fintech sector is seeing, and questions about sort of culture, if it's the flip side of that coin, that the move fast and break things culture evolving into a much more acutely aware of compliance and risk culture?
Yeah, I mean, historically, the mantra in Silicon Valley was move fast and break things. Now, that works in some sectors a lot easier than it does in banking. In banking, you're dealing with people's money, and you've got very powerful entities making sure that you follow the rules. And we have had some issues this year or in the past couple of years with some of our larger entities, including Robinhood being probably a pretty notable one here. I think some of those scares have caused people to go after compliance at a much earlier stage. So where I invest is at seed, and several years ago, you rarely would have seen a chief compliance officer at this stage. I would say now it's much more the norm that at Series A, there's a chief compliance officer. And then there's all sorts of startups that have launched that allow you to offload some of that compliance burden onto them. So a number of companies have come to fill that void a little bit. And we're very bullish in that sector.
Great. Nigel, if you could riff off some of the themes that you've heard brought up here, what are your thoughts on these topics?
Yeah, DNA and culture and everything in every company, team, society, it is what makes us go forward. People make things happen. Google didn't exist before a couple of chaps decided to make it happen. So people make everything happen. One of the things, just while we're talking compliance and risk, I have a slightly contrarian view. I believe compliance is a risk. Like all risk, if you manage it, you make money out of it. And because I used to be a trader. And risk management is a skill, I think, that has not been within the compliance departments of most organizations. And therefore, and there's also definitely no digital within there. And so there's a lot of hypocrisy about, we can't do this because we're on risk. And when I'm a global company getting fined $2 billion for money laundering in Mexico, or I'm getting fined $1.3 billion for rebadging payments down to Iran, so that's HSBC and BNP, and then saying to FinTech, you can't manage compliance risk. I think there's a lot of hypocrisy around, because if you look at, ourselves, we have a compliance first culture, a DNA that manages it through and uses our data, and it's endemic within the company to do the right thing, like you used to have in the old trading floor days, when it was you had especially driven by the UK regulator, you were driven to think about it first before doing. And we've ended up in a place where compliance is now an excuse not to do something. Risk is an excuse not to do something.
Exactly.
You make money by taking risk. You do that whether you're a soldier or whether you're a banker. You take risk, okay? And that's the nature of the job. Banks, by definition, take risk. My great-great-grandfather was one of the founders of ANZ Bank, and they've survived all the way through the years by being places of safety and places of risk. And that risk oils the capitalism and society and things. So I think we've ended up in a place where it's used as an excuse because it's not understood how you risk manage your compliance risk, just like you do in your trading risk or your lending risk or whatever other risk you're taking in the operation, because compliance has been stuck like sellotape around the outside whereas your fundamental trading risk and say credit risk and others are from the inside out, because that's where you make your money. If you change your culture to think of another colleague, Slava, who's the founder of Railsbank, they just, all they talk about is compliance and things, because they've learned how to manage it, take on the high risk business and make money in a way that keeps the regulator happy too. And that's the other thing is when regulators are, and we talk to them pretty much 2 to 3 times a week at the moment, because of COVID, because it's important to engage with them so they know how they can get straight and in touch with what's going on the street. If you can show and demonstrate how you're managing and you have a DNA that does that, now coming back to DNA drives everything in companies, that's where it's going to be different. And coming back to Matthias' earlier comment, I think it's going to be incredibly difficult to change that culture within some of the larger legacy firms to move forward. And so I think the real challenge is some of the guys are growing up. Yes, Robinhood had some issues, but didn't have a $2 billion fine. Okay. Yeah. So, hey, we love it. Perhaps it was there in the open. Okay. Others have put it under the carpet or tried to put it under the carpet. So I think we should just all fess up, express the fraud and everything. Don't beat up Monzo for having high amounts of fraud in it. Go look at the same fraud in all the other high street banks. It's there. It's just not discussed. Bring it out into society and discuss it, I think, and then we can move forward.
So when we think about taking, smart risks, Sheel, I think maybe if we could come to you next and hear a little bit about what some of the fintechs and new ventures and new entrants are doing, really well. Who's pivoting well? Who's transforming and transitioning well in the new challenging environment? And this may be the last word, I think, for the panel.
Yeah, sure. I mean, so I think a number of companies have stepped up and done something unique during this time. A couple that come to mind are, the U.S. government had this PPP package that helped small businesses get money. And a lot of the fintechs stepped up and said, you can apply through us. We'll manage this Byzantine process for you. So Square, Cabbage, many others stepped up during that time. I think a bunch of other fintechs have sort of risen to the occasion in changing how they act and manage customer relationships during this time as well. Yeah, I think we're almost out of time now. So
okay. Well, thank you very much. I think it was an excellent, lively, informative panel. Some notes of caution, concern, but also a lot of talk about what's possible when you really put the customer at the center and do that in a very serious way, not just giving it lip service as a buzzword to get you out. And, I think we also see, a change in the overall ecosystem with regulators, certainly at the top of the house, really embracing and understanding the need to change more than ever in this post-COVID world or co-COVID world. So thank you very much for tuning in today, and we appreciate everyone joining us.
Thank you to Kroener French for moderating the panel and allowing us to better understand the successes and failures from the digital and cultural transformation standpoint.